In this video, I'm going to talk about how might taxes have an impact on your financial plan, and then the number one strategy on how you can pay less immediately. In many of my videos, I talk about companies make money, individuals get taxed. So we're going to talk about taxes in your financial plan, specifically how taxes will control how much money you make, right, if it's coming from an employer. Number two, we're going to talk about how you can actually flip that formula and you get to control how much tax you pay, completely in your hands at your choice today. Stay tuned. And the last one, how do you do tax deferred income so you're making money deferred till later? Or honestly, how do you do it tax-free? Got a lot to talk about. Get some paper and a pen, take some notes. So given we're talking about paying tax inside of a financial plan, first let's work on the financial plan. So in doing a whole financial plan, let's start with financial documents. They're called a P&L and a balance sheet. So a P&L is income and expenses, how much money you make, how much you spend. And a balance sheet is assets and liability, how much you own versus how much you owe. So the pattern of most people's life, which I love to disrupt, is one of the first things that I do. So you can make any comments throughout this video about the pattern of your life. And don't just make little like, I have a pattern. Like, tell me about it. What is the pattern? And I'll give you a few different words you could use for that definition. So most people, their pattern of life is they make money, they spend it, right? P&L, right? Income and expenses. Then as they get into their 20s, typically in their 20s, they start creating liabilities, right? They might buy a car. Now you have a car payment. You might buy a house in your 20s. You might get into credit card debt in your 20s. You have student loan debt. So all of a sudden your liabilities start stacking up. And then what happens to 90+% of the people is they start living what I call a lifestyle cycle. So what you do is you start living your life instead of income and creative and how can I make money and getting curious about how do I put that money to work and invest money. I call that a wealth cycle, right? Income to assets, income to assets. That's a wealth cycle. We're not taught that. We're taught a lifestyle cycle. You get into debt and all of a sudden all those, bills. So your liabilities is the total you owe on your vehicle, the total in student loans, the total credit cards, the total house. And that creates a monthly payment, which is your expenses. So then your whole focus of life for most people is, can I afford it? And instead of saying, I can afford anything and focus on the income side of your life, you're focused on the expense and liability side of your life, and you're letting that drive you. And so you go buy something new, right? You need some new furniture. You go to the furniture store. It's like, oh, well, how much can I afford per month? Notice how all the marketers of the world and every commercial of the world, they actually speak right to that. You can actually make payments to fit your budget. And so now you become a lifestyle person. Your whole life you live, instead of enjoying it and spending for fun and having a plan, you spend out of necessity of, I have to make my monthly minimum amount, right? And then everyone's marketing and speaking to you. So just don't be those people. Notice it, break the pattern. How many of you right now comment are in a lifestyle cycle? And your whole pattern has been not just you make some money and you ratchet up the debt, which, by the way, the only reason people have credit card debt is because you don't make enough money. So let's solve the right problem and make a lot of money. And then you can just pay off the debt. I want you to use the cards because I want you to have credit. So the pattern is your lifestyle and your liabilities drive how much can you afford. And there's your life, 20, 30, 40. I know people that have lived that life for 50 years. Got to be horrible. I want to switch that to a wealth cycle. So now let's talk about taxes within this financial plan. The best thing to do is learn to make more money and learn to make it inside of a company. If you have a job, that's fine. You have a job, but you need a company like on the side, right? A lot of people right now are calling it side hustles. My challenge with the word side hustle, it implies just a little bit of money, maybe $100,000 extra a month. Now, for some of you, that might be a lot of money. As you continue to listen to me, which I need you to subscribe, hit that bell so you get notifications every day. And I'm going to keep being in your brain every day. Money muscles. I'm going to condition those money muscles. So you start thinking, what else could I do? And that business needs to be in a company. I don't care where you are in the world listening. It needs to be some sort of a corporate structure where you get tax benefits. And if you don't have those people, put it in the comments and say, hey, I need those tax people you're talking about, and I live in this country, and we'll have a conversation and help you out. So back to the tax side of it. Here's the easiest thing I teach. Companies make money, individuals get taxed. So if you're making just income as a W-2, you're getting all the taxes taken out and you get to live on what's left. If you have a company, that whole formula is reversed. You get to make it, deduct it, pay tax on what's left. So you're in control of your deductions. In America, there's 81,000 pages of tax code that you can use to deduct against that income. So you make more and more money, which means you might have more contractors, you might need more equipment, you might have more people to pay, but you're making a lot so you can spend more. Those are deductions. And oh my gosh, I mean, where would I go? Like, we don't go on vacations, we go on business trips. A big one that I tell all my clients is to get into real estate. Last I checked, you can travel the world, and under very specific tax code, you can write off that trip with your real estate business as long as you visit real estate, you bring home the proper documents. So you can do that. I actually have clients that are in the wine business, and again, they do real estate and wine. They can travel anywhere in the world, make it a business trip, not a vacation. I have clients that are bird watchers. Last I checked, there's birds all over the world, and they write off all of their business trips to their business as long as they follow the tax code in your country. So we're not like beating the system, we're just using it. And my invitation for you is to use it. And how do you use taxes in your plan? Well, you do want to pay the least that's possible. So you use a company, number one, as the highest strategy. And then number two is, as you make it, how do you keep it and pay less in taxes? So clearly, if you have real estate, there's a couple strategies, right? There's opportunity zones, which now for generations, you can push forward capital gains for 10 plus years. You can do 1031 exchange. There's a lot of strategies in real estate that you can pay tax later or defer even to the next generation, as long as you're using corporate structures properly. Another investment vehicle that I'm a huge fan of is a Roth IRA. Everything inside grows tax-free, tax-deferred. And there's some very elite strategies that if you're interested in elite Roth strategies, make a comment. By the way, if you don't give me your email and your phone number, it makes it really hard to connect with you. But then say, I want the elite strategies of how you really can use a Roth, because you can only put up to $6,000 away till 50 and $7,000 after 50. So it's not a lot you can put away per year, but done properly and very strategically, you can do real estate. For example, using Roth IRA money, you can buy digital currency, you can buy into the stock market, and all of those gains are tax-free, tax-deferred. There's a lot of ways as you make it, you want to keep the most, pay the least in taxes legally, and then as you invest. So you make it and invest it, pay the least, use the highest strategies possible, which means you're going to have to learn. I want you to lean in, I want you to learn, and I'm going to give you a couple chapters of my Millionaire Maker book coming in a minute, and I'll tell you about what I want you to do with that. I have a very specific activity that I want you to do with that. So before I tell you a little more about the book, let me tell you and just share a few stories on how this works, right? Because the whole topic of this video is taxes relative to your financial plan. So number one, we're assuming you have a plan, right? And you're changing that pattern from a lifestyle cycle to a wealth cycle. But let's talk about how you really can reduce some taxes. And I'm not going to ask you to go study the code, but I am asking you to have just some conversations with some very high-level tax people. And here are some examples. Like one of our clients that came in, through an online portal just like this on a video, she said, well, how do I write off my cats? I thought, well, that's interesting. So I gathered a little team of our experts around, and we started interacting with her. And she said, well, I have 18 cats, which costs a lot of money. Food, vet bills, all the little things you got to have for cats. I'm like, my God, how much do you spend a month on 18 cats? And it was a substantial amount. So our tax strategist came up with a great plan to start a cat business. So he took her hobby, took her love, and had an LLC formed. All the cats have names, of course. So she started writing blogs about their personalities. Like, this was for real. It's shocking. But here's where it gets really fun. She actually started a store where she sold all the little cat scratchers. And, now she sells organic things and things with CBD and food and all whatever. I'm not a cat person. I grew up on a farm in Nebraska. Cats kill mice and they stay outside. So this whole thing it doesn't make sense to me, but not my problem. It's my clients. And I don't have any judgment about it, by the way. Just interesting. So fast forward, she's well into six figures between her store, all the different items that she sells. And then these cats are talking to other cats because now other people find like the cats have personalities and they all talk to each other. It's sort of funny. It started with cat blogging for real and moved into this very affluent store, and how she's doing joint ventures. I know she has sponsorships from some of the big pet stores where they actually endorse and sponsor her. She'll do like cat sitting if you want to go away for a while, all sorts of things. But what's cool, she took something, just like a lot of you have a thing that you love to do. You might like to paint, you like music, whatever your thing is. Like my son did skiing, right? He took skiing, he made it a big tax deduction as part of our financial plan, right? Skiing is not a cheap sport, not anymore. I don't even know a place that you can probably get a lift ticket for under $100. So you add that up plus all the equipment. He was a very highly competitive skier, which means at least, 6 to 8 pairs of skis. And to make it a business, he started giving ski lessons. So lots of things I'm going to teach you to do over time to really use the tax strategy in your benefit instead of complain about it. The more money you make, the more this is important to you. The wealthier you become, the more this is important to you. So lean in, learn. I want to give you on the link below in the description, I'm giving you the first 3 chapters of my Millionaire Maker book. I want you to read them. And then at the end of that, I want you to fill out what we call a gap analysis. Where you are, what are you doing, which pattern are you in, lifestyle cycle or wealth cycle, and let's start repurposing and repatterning your life. So you're actually going to enjoy this conversation about taxes.